Interview: ComplyAdvantage discusses cryptocurrency regulation. Money laundering is a problem that is frequently mentioned in the mainstream media as a disadvantage of Bitcoin. Detractors argue that Bitcoin makes it easier to launder money because of its clandestine nature, lack of regulation, and ability to bypass KYC requirements. Some believe, on the other hand, that the open-source nature of blockchain technology, which allows anybody to track wallets online, makes money laundering more difficult in some situations. It's a fascinating issue, and to learn more about it, we spoke with Charles Delingpole, the CEO and creator of ComplyAdvantage, a company that delivers anti-money laundering technology to assist businesses manage risk and fight financial crime. CoinJournal: CJ, how big of an issue is cryptocurrency money laundering? ComplyAdvantage, CD, CEO and founder Charles Delingpole: cryptocurrencies are rapidly becoming mainstream, with 98% of businesses claiming to be crypto-native, accept/work with crypto, or plan to offer crypto-based services in the future. This implies that all businesses should be concerned about the regulatory and financial criminal threats offered by cryptocurrencies. However, it's vital to keep in mind that illegal behavior accounts for a relatively small percentage of total crypto transactions. According to a research released in January 2022 by blockchain data analysis company Chainalysis, illegal crypto transactions totaled $14 billion in 2021, up 79% from $7.8 billion in 2020. However, because to the quick rise of overall crypto transactions, this only accounts for 0.15% of all crypto transactions in 2021. CJ, in comparison to TradFi/the real world, how much simpler is it to launder money with crypto? CD, for TradFi and crypto companies, many of the major financial crime concerns are the same. Money mules, bogus accounts, identity theft, and account takeover fraud are all issues that people are concerned about. The anonymity that various versions of crypto provide is one of the key added hazards over and beyond TradFi. Transactions that take place over decentralized, off-chain networks are an example of this. Anti-money laundering protections are often weak or non-existent on these networks. Because these platforms are off-chain, transactions aren't recorded on the public blockchain ledger, making it far more difficult to track down criminal activity. CJ, could you offer a simple overview of how someone might go about laundering money using crypto for individuals who aren't familiar with the subject? Not that we're searching for advice, we're simply trying to figure out what's going on. CD, the core concepts of money laundering remain the same whether a criminal uses the regular banking system or cryptocurrency. Money earned through illegal activity is first deposited into the financial system, then stacked to make tracing its origins more difficult, and ultimately withdrawn so that criminals may utilize it without arousing law enforcement suspicion. Criminals may utilize cryptocurrencies and exchanges alongside the regular financial system to obscure the source of their assets. Therefore, the second stage, layering, has gotten a lot of attention with crypto. Consider the following scenario. Converting one cryptocurrency into another and traveling from one blockchain to another is known as chain hopping. Mixing or tumbling involves combining many exchanges' transactions, making it more difficult to trace transactions back to a certain exchange, account, or owner. Cycling entails transferring fiat cash from one bank to another, buying and selling Bitcoin, and then transferring the proceeds to another bank or account. CJ, what are your thoughts on the story that Bitcoin was utilized by Russia to dodge sanctions? CD, we wrote a whole post to answer this very subject. Cryptocurrencies have already been used by countries barred from the global banking system to circumvent sanctions. Iran has been found to be doing so in studies. While reports claim that Russia has the world's third largest crypto mining industry, experts say the crypto market lacks the liquidity to process the volume and value of transactions required to keep the Russian government afloat. Ordinary Russian residents are considerably more likely to resort to cryptocurrency to protect their money in the face of tremendous inflation, dramatic currency volatility, and an inability to obtain cash, make payments, or move funds in and out of the country. In Russia, the use of cryptocurrencies for payment is presently prohibited, and the Central Bank of Russia advocated an outright ban on cryptocurrencies and mining earlier this year. However, this hasn't prevented Russians from owning cryptocurrency. CJ, could you give an example of how terrorist financing is used? CD, Cryptocurrency assets and DeFi play a significant role in terrorist financing. These currencies and technology allow for cross-border transactions that are relatively anonymous, don't require an intermediary, settle in minutes, and are typically difficult to halt or reverse once started. The fragmented regulatory landscape also makes it more likely that suspicious transactions may go unnoticed, especially in areas where anti-money laundering and counter-terrorist financing (AML/CFT) regulations are low. When terrorists and violent extremists utilize cryptocurrency, Bitcoin is frequently mentioned. Monero and other privacy-enhanced currencies, on the other hand, are becoming more popular as alternatives. In the summer of 2020, a major pro-ISIS news website declared that it would no longer accept Bitcoin donations, instead opting for Monero. The Electronic Horizons Foundation, a pro-ISIS cybersecurity outfit, then issued a warning in April 2021 that Bitcoin transactions may be more readily traceable. CJ, these issues, terrorism funding, money laundering, and so on, have grave consequences. But do you believe that the benefits of cryptocurrency outweigh the drawbacks? CD, cryptocurrencies have a lot of advantages thanks to clear, open worldwide regulation and monitoring. Many major financial centers, including the United States, the United Kingdom, and Australia, are moving toward complete regulatory frameworks for crypto. These actions show that politicians see the creative potential of many crypto companies. Regulatory arbitrage, in which the regulations and standards that crypto businesses must follow fluctuate from nation to country, is one of the most significant threats. This is linked to the possibility that certain nations, in order to maximize revenue from crypto businesses, would allow them to operate with little to no regulatory monitoring, resulting in a Wild West atmosphere where unlawful activity is more likely to go unnoticed. CJ, what role do decentralized exchanges, DEXs, play in circumventing sanctions and money laundering, and is there anything that can be done to prevent this? CD, because decentralized exchanges, DEXs, are still unregulated in terms of anti-money laundering and counter-terrorist financing, AML/CFT, no client due diligence, sanction screening, transaction monitoring, or other associated procedures are implemented. As a result, they are more likely to be employed for sanctions evasion by sanctioned Russian individuals and businesses, for example. When used in conjunction with anonymity-driven privacy coins, which may then be used to make transactions on the dark web, these concerns are amplified. DeFi has a lot of promise for new and interesting uses, and we're seeing a new set of financial goods and services develop as a result. However, as the market matures, DeFi platforms and other virtual asset service providers, VASPs, will need to pay close attention to counterparty risks as well as consumer concerns. Transactions utilizing unlicensed or unregistered VASPs and unhosted wallets are extremely difficult to verify because it's difficult to tell who's doing them. Furthermore, these companies should verify that they have put in place strong customer due diligence procedures to screen out rogue actors before any transactions take place. CD, regulators and politicians all over the world were, and still are, looking into crypto regulation in general, and stablecoin regulation in particular. In the summer of 2021, a year before the UST collapsed, U.S. Treasury Secretary Janet Yellen called on Congress to develop a regulatory framework around stablecoins. The G7 has lately urged for measures to watch and address financial stability threats posed by all types of crypto assets. The fall of UST brings these remarks to the forefront and raises awareness. Fundamentally, though, efforts to increase regulation of cryptocurrencies have been on for some years. Thank you for watching. Don't forget to like, subscribe and share our channel.